Today I'm going to show you the exact pattern that Bitcoin has been creating since 2015 that when confirmed has created a significant reversal in the market from bearish to bullish. Now by understanding this pattern you can predict when the next bull rally will be in the market, and that will then allow you to position yourself to profit from any moves and position yourself quite early. This pattern is simple to identify, and crucially it can also be used in other asset classes such as stocks, commodities and currencies. If you like today's video, don't forget to like, subscribe, hit the bell notification. My name is Zahir Anwari. I'm a co-founder of SublimeTrading.io. We've helped hundreds of private investors over the past 10 plus years profit from trends in the market by learning our simple to apply methodology. I also write for a number of publications such as Benzinga.com, and I'm regularly invited to guest speak on how everyday people can profit from the market and particularly supercharge their stocks portfolio over the next 3 to 5 years. Okay, let's get into today's recording. So this is a typical chart setup of mine when I am conducting my analysis. It's the same setup that I use when I'm looking at cryptocurrencies, when I'm looking at stocks, commodities and currencies. It's a 3-screen setup with the monthly in the top left, the weekly in the top right and the daily time frame down here across the bottom. We look at the larger time frames or the higher time frames because ultimately what we're looking for are the big moves in the market. Now this does mean applying a little bit of patience, and patience is often a skill that is underappreciated or really not perfected, if you like. Often people are on lower time frames, 5-minute, 15-minute, 1-hour time frames, day trading, and because people are day trading and taking multiple positions a day, the element of patience has been lost. What you want is to wait for high probability environments that when you do enter a position allows you far more chance of profiting than making any losses, but also when you do profit allow you to catch the big moves in the market over weeks, months, even years, and also guys that allow you to compound. And compounding is very much the secret sauce, if you like, when it comes to growing an account. So let's start with the monthly time frame. We'll then move across to the weekly and then come down to the daily time frame. The pattern that I'm going to share with you is on the weekly time frame, but it's worth starting on the monthly time frame to really get a clear picture of what price is doing. So let's look at the monthly time frame. Now we know Bitcoin went on this initial bull run back in 2017. That's when there was a lot of hype around cryptocurrencies in its early years of particularly its first real major trend in the market. Following that, there was a correction, and then price created a base in 2018, went on another mini run up until the high of 2019, did another correction to the low of 2020, and then went on this significant bull run, most recent bull run in 2020. And since then, we've had a bit of a correction, and then of course this year, we've had this move to the downside. Now, if you look at where price currently is, it's at a very, very interesting position. It's finding support at a previous high, which is the high from 2017, and that is also coupled with the $20,000 round number. Round numbers are significant because they can act as support levels or a floor, if you're not familiar with support, where price can come to and then bounce back off it to the upside. And that's what we're really looking for at the moment with Bitcoin. We're looking for Bitcoin and the cryptocurrency market as a whole to find an element of support and then really start this recovery to the upside. So if we look at the month of June, which is this most recent candlestick, it's trading below the low of last year, which is this marker right here, this red line. The green is the high of last year. It's very much trading below the low of last year, but it's holding at this support level, which is the high of 2017, which is previous resistance, now support. If this level holds strong, then we could see a bounce back to the upside. Now, this isn't the pattern that I'm referring to. The pattern that we want to look at is actually on the weekly time frame. On the weekly time frame, we have the black line, which is the 200 simple moving average, and we also have the 50 simple moving average. We can see that price, this bear trend since November 2021 has taken price to around the weekly 200 moving average. So far for June and so far for this week, price is currently trading just below this level, but it's finding support at that $20,000 round number. these areas of support and resistance, there aren't always hard levels. Price tends to come to around these levels, bounce around these levels before dictating a direction. Now, of course, that could mean further weakness to the downside, or if price does find support, it could bounce off this support and move back to the upside. So what is this pattern that I'm referring to? Well, I'm going to just move back to around this area here. So this is May 2014. This is when the 200 moving average first started printing. Now, if you're not familiar with simple moving averages, the 200 simple moving average gives you the average of price over the previous over the previous 200 weeks. The 50 simple moving average gives you the average of price over the previous 50 weeks. Now, why do we use the 200 simple moving average? Well, the 200 simple moving average is a proven indicator of the long-term trend. When price is above the 200 moving average, we look for long opportunities. When price is below the 200 moving average, we look for shorting opportunities. Now, the 200 simple moving average is also an area of support and an area of resistance. So in a bull trend, price can come down to support. In a bear trend, price can come down to support and bounce off it. In a bull trend, price can come up to it as resistance and weaken further. So the 200 moving average is a proven indicator of support and resistance, as well as the long-term trend. So if we look at 2015, this is when price first came to the 200 simple moving average. It found support, walked along it for a number of weeks, and then it was here in August of 2015 where price eventually went on a significant bull run to the high of December 2017. So you're looking at a bull run of over 8,000%. So that's quite a bull run, quite a run that Bitcoin was on. And now, of course, if you are already trading cryptos, or if you're new to cryptos are extremely volatile, which means that if they move very, very quickly. But then, of course, they can swing back against you quite aggressively as well. They can swing back against you quite aggressively as well. So you've got to be really careful when it comes to your risk management and your exit management. Now, of course, after every move in the market, there is some kind of correction. So if you look at this correction in a little bit more detail, the correction first came to the 50 simple moving average, which we already mentioned was support, broke through it, and then came down to the 200 simple moving average in 2018. Now, what did we see in 2018? We saw another run to the upside. Not as significant as this run here, but nonetheless, we did have a bounce off it of around 300%. Price found an element of resistance and then came back down to the 200 simple moving average. Now, here's a really good example, guys, of what I mean by moving averages not being hard levels. We can see there's a spike below it in March of 2020. There's another spike below it. Both in March 2020. We're looking at the weekly time frame. So both these weekly candles spiked below and then found support and went on this next huge bull run, which was in 2020 up until the high of April 2021. Now, if we look at that, that was a run of over 1,000%. So you can see that every time price comes to around the 200 simple moving average, it tends to find support and then goes on this bull run, this leg. Now, how long that bull run is anyone's guess. We let price dictate that. But the point is, this pattern tends to repeat itself. So we got to be aware of what price could potentially do going forward, given that price is now at the weekly 200 simple moving average. Okay, so it was at this point here in April 2021 where price found resistance, corrected to around the 50 simple moving average, walked along it for a number of weeks, bounced off it, printed this high, the new high, in November of 2021, and since then price has been in this decline. It's now at a very strong support zone. The support zone is made up of the weekly 200 moving average. It's made up of the $20,000 round number. And once again, if we go to the weekly time frame, the monthly time frame, it's also made up of the support level, which was previous resistance from 2017. So we've got three levels, if you like, that have clustered together to form what could be a support zone that eventually forces price back to the upside. Now, if we come down to the daily time frame, the daily time frame paints a very different picture. It's actually below all three moving averages. It's below the 200 moving average, below the 50 simple moving average, and below the 20 simple moving average. And you can see that it goes on this run, creates some kind of consolidation. Again, you can see how the daily 200 moving average is being used as resistance in this case because it's below the 200 moving average. But the way to look at this is that the higher time frames hold more strength than the lower time frames. So the weekly time frame is big brother or big sister. The daily time frame is little brother, little sister. What we want to see is alignment. So we want to see the daily time frame reverse, mirror what the weekly time frame is doing, and start moving in that bullish direction. And the way we will have confirmation of the daily aligning with the weekly is when the daily time frame moves back above the 200 simple moving average. And that's really when we can get in early potentially and start looking for long positions. Depending on how you use Bitcoin, if like me, you don't really trade Bitcoin, you use it more as a market indicator. And if Bitcoin does give me enough confirmation and enough confidence that we are in a bull recovery, then I may start adding coins in my portfolio. So once again, guys, a quick revision. What we have on the monthly is price at this support level. Let me just open that up, which is the high of 2017 acting as support. On the weekly time frame, we can see that price is at a support zone, which is made up of the weekly 200 moving average and the 20,000 round number. That's $20,000 round number. So we've got three levels that have clustered together that we would like to see hold strong as support and force price back to the upside. If that holds strong, we would like to see a reversal back to the upside on the daily time frame, and we would like to see price moving back above the 200 simple moving average. When that happens, our trend filter will also turn green, and that's when we'll have good confidence that we are in a bull recovery. So do keep an eye out on that, guys. The weekly 200 moving average since 2015 has proven to be an area where price finds support and then goes on the next bull run. So once again, guys, if you like today's recording, don't forget to like, subscribe, hit the bell notification, and do share this out with others in your circle who will benefit from this information. So what next, guys? Well, go down to the link in the description below, click on the link. That link will open up into this scorecard. Click here, take the scorecard. This will literally take you less than 2 minutes to complete. It will give you a very good indication of where you are right now with your stock's performance. And remember, guys, the logic that we apply to the stock market can also be applied to cryptocurrencies, commodities, and currencies. So what you'll find out in this scorecard will help you across the board. Now, once you've completed this scorecard, which again will take you less than 2 minutes to complete, you will get 30 days free access to our Hot Stocks Vault. In the Hot Stocks Vault, we share the top 10 best performing stocks for the week, saving you guys thousands of pounds in scanner subscription costs. And also, guys, don't forget the time that goes into finding these stocks as well. It's not just a case of clicking a button and there you go. There is a lot of time and analysis that goes into finding these stocks. Not only do we save you the money and the time doing that, but we also train you in the logic. And on top of that, guys, if you like the 3-screen setup that I've used in this recording, you will also get free access to that as well. So click on the link, complete the scorecard, come through to the Hot Stocks Vault, and I will see you in the community or in the next recording.